If you're turning 65, then you have a decision that you have to make with your health insurance coverage, especially if you're retiring, or maybe if you're not retiring. And that's what I want to focus on in this video is, do I need to go to Medicare if I'm going to keep my employer coverage? I'm not going to retire. I have the option to keep my employer coverage. Do I really need to go to Medicare? Do I need to apply for Medicare? Can I not just stay on my employer coverage? Short answer is yes, you can stay on the employer coverage. But the question should really be, should I stay on my employer coverage? And that's a question that we can't just outright answer right away. We have to have a conversation in order to know your situation and figure out what's going to be the most beneficial for you and your family. And really, we do that with a couple talking points, fact finding, if you will, and that's what I'm going to discuss. But before I discuss these points, I want to say, if you are in this situation and you would like to know, do I need to go to employer coverage, or do I need to keep my employer coverage, or should I enroll into Medicare? You need to have a conversation with an agent, and we would love for you to follow the information in the description of the video below so that you can talk to one of our agents today about your Medicare options, especially if you're going to continue to work. That's something you need to talk to an agent about. But let's talk about how we have these conversations with our customers. What are the things that you need to consider if you're on employer coverage and you're considering enrolling into Medicare, or maybe you're considering not enrolling into Medicare? What do you need to consider? Well, first things first, you need to consider something, and this is the most important part that we're going to talk about today, is, am I on creditable coverage? Am I on creditable coverage? If you're turning 65 and you have the option to stay on your employer coverage, that's great. But we need to make sure that it is creditable coverage. And Medicare defines creditable coverage as coverage that's seen as equal or greater to Medicare coverage. And it does have to include drug coverage. Now, I want to talk about three different types of coverage that are very common that we need to discuss and identify here more practically, I guess you could say. Number one, let's talk about COBRA. If you're maybe going to continue to work and they're offering you COBRA, or you're not going to work and they're offering you COBRA, you need to understand that COBRA is not creditable coverage. COBRA is not creditable, meaning that if you elect to be on your COBRA work coverage or your COBRA coverage, that will not count as creditable coverage. It won't count. You would have health insurance, and that's fine, it will work, but it's not going to count as creditable coverage. You need to understand that. So if all they're offering you is COBRA, then it's not going to count. Number two, if you are turning 65, it's pretty easy to define if your work coverage is creditable coverage by the amount of employees that are working there. If you're turning 65, well then your coverage at work has to be through an employer that has at least 20 or more employees. So if the company you're working for has 19 or less employees, well then you do not have creditable coverage. Even if it's good coverage with drug coverage, doesn't count as creditable. It has to have at least 20 employees, 20 or more employees. 19 or less, it does not count. If you're not turning 65, maybe you're watching this video, you're going to Medicare because of a disability, you actually have to have 50 or more employees for it to count as creditable. So if you're under 64, under 65, and you're going to Medicare, and you're going to be looking to keep your employer coverage, it has to be 49 or less would be not creditable, 50 or more would be the number to keep you in creditable coverage. Now, why is it so important that I have creditable coverage? Well, if I'm on some kind of health insurance and it's not creditable coverage and I don't go to my Medicare, every month that I'm not enrolled into Medicare, I will accrue a 1% penalty every month that I'm not on creditable coverage. So if I'm on COBRA or if I'm on my employer coverage that's not creditable, I will get a 1% penalty every month, and the most that I could accrue in a year would be 10% a year. So those last 2 months of the year, I would not get another 1%. But every year, 10% penalty is where it maxes out at. I would accrue every year a 10% penalty that I would pay on top of my Part B premium. So if my Part B premium is $200, which right now it's more than that, it's $202.90, so technically it's going to be more than that. But at $200, my premium now would end up being $220 for Part B that I would pay every month for the rest of my life. Now, if you go 3 or 4 years and you have a 40% increase, you can see why that would add up, especially since Medicare increases that Part B premium every single year. And your increase would increase with the Part B premium. So it's very important that you understand that if you don't have creditable coverage, you absolutely need to consider going to Medicare. That would be the move. If you have creditable coverage, we still need to have conversations. So let's move to number 2. Number 1, if you don't have creditable coverage, absolutely need to go to Medicare. If you do have creditable coverage, well, let's continue to the next talking point. That is comparing out-of-pocket costs. Comparing my out-of-pocket costs. I need to compare the out-of-pocket cost of my work coverage, my employer coverage, and Medicare. I need to compare them with each other, right? And the things that I'm going to compare are going to be deductibles, premiums, and max out-of-pocket. Those are the things I'm going to compare. I'm going to compare deductibles, premiums, and max out-of-pocket. Deductible being the amount that I have to pay before my insurance will pay anything. Premiums being the amount that I'm paying every month in order to have the coverage. And then my max out-of-pocket being the most that I would spend out of my pocket in a year, right? Now, I want to break this down and show you the numbers, like maybe something we can commonly compare that you can look at and see on paper. But like, you know, Medicare we know is going to cost you, let's say we get you on a Plan G with your Part B premium. You're looking at your premium to go with a Plan G and Medicare. I'm going to label these for us, Plan G plus Medicare. You're looking at your premium being something like $350 for everything that you need. Then you're looking at your deductible being $0. And your max out of pocket in this situation for this year would be $283 because all you have to do is pay for your $283 Part B deductible. Well, if my work coverage, maybe my employer coverage is something like this. Maybe my employer coverage is something like a premium every month of, let's just do something really low. Let's say that your premium is $100. You may be tempted to go this way because there's a $250 saving, but your deductible is $2,500. And your max out of pocket is $7,000. Well, in that case, maybe I do still consider going this way, even though I'm going to spend more in premium, spend more up front. Because in the event that I have a major service completed, I'm going to save money over here compared to the $7,000 that I could spend over here plus my premium. So we got to compare your out-of-pocket cost. That's going to certainly be something that we need to consider. We need to make sure you have creditable coverage, and then we need to compare your out-of-pocket cost. And then I need to make sure that I cover my family. That's something to consider. Maybe you're a legal guardian of your children or grandchildren. Maybe your spouse is on that coverage that you have with your employer. That's something you need to consider. You need to factor that in to your overall price and comparison that we do on out-of-pocket cost is finding coverage to compare or to cover your spouse. Maybe they have the ability to get coverage through work, whatever. You need to figure that part out. So there you have it. Is it creditable coverage? Comparing my costs, does it make sense to go to Medicare based on the out-of-pocket cost? And is my family going to be covered when I compare those out-of-pocket costs? Those are the things we want to talk about. So today, what I'd love for you to do is follow the information in the link of the video below, follow the link below in the information of the video, and talk to one of our agents who will certainly let you know whether or not you need to consider going to Medicare, even if you can keep your employer coverage. Medicare is a journey. We're a compass. Use it.